Hey guys, what's up? Welcome to another episode with me, Shashank Udupa, and this is the Muhurat trading episode. Now, I really want to apologize because this is not a live stream. This time, I want to spend some time with my family, and I couldn't do it on a Tuesday evening because I have to be somewhere else. But I will fulfill my promise today because I told you that we are coming out with our own report for our Muhurat trading top Diwali picks from my side. So before wasting any more time, let's quickly jump into it. And again, happy Deepavali for everyone today. And please don't miss this episode because I'm going to show you a lot of interesting things here. And for all the people who have not subscribed to the small case in the past, I also have a very nice Diwali coupon code for all the people watching this stream. So let's jump in. Now, first things first, before we go ahead, our small cases launched literally 7 to 8 days ago. We launched it a few days ago, and since then it has, touched, God's grace, it has been doing quite well. So we are very happy with that. But because there is a Diwali offer going on, I thought let me quickly come and inform it to you guys. So for all the people who are looking to explore small cases, I'm not saying go buy mine, but whoever wants to explore small cases, we basically have two small cases. One is a quantitative basket, and I made a deep video about it. The other one is a fluid C portfolio, which is a long-term compounding basket as well. So we have both baskets ready, and for anyone who is interested in it or is going to look at it, you can definitely go and put this coupon code, which is completely open to all, which is called Diwali off, and you will get 750 rupees off on this entire coupon code on any plan that you take. Whether you take the fluid C or fluid Q, you will get 750 off because the earlier discount was only 250. Now please note, this is not valid for a long time. This is only valid for a very short period of time. So whoever wants to take this advantage can definitely take this advantage. Okay, awesome. Now coming to our Diwali, I don't want to call it picks as such, but our Diwali stocks that we are very bullish on for the next 1 year. So not just bullish, but we find them very, very, very interesting. So this is the first time we're coming out with a proper research report, a signed research report, and these are our picks for the next 1 year. Now, these are only 3 companies that we are looking at. So let's quickly jump into it one by one. Now, first of all, before we go into the picks, why are we looking at these 3 companies and what is the theme behind it? Because everything in the market has a theme. So the theme here, what we are looking at and what we are calling internally is called the spending super cycle. Now, as you know, India has undergone a rapid change in the market. We have seen a lot of GST cuts happening, and we've seen the impact of those GST cuts happening with a lot of data coming out. And obviously, we work only with data, and I will show you some data as well. So first, we have the theme of premiumization. Now, whenever a premiumization theme comes into the picture, there is more money to be made for businesses, and that is exactly what we are looking at over here. Next, we have the rate cycle theme. Rate cycle is basically the interest rates have come down. That means the cost of borrowing has come down. And if the cost of borrowing has come down, then companies can take loans at cheaper rate and start growing, mainly manufacturing companies. That is what we're looking at right now. Third, we have the GST rate cuts that have come in, and they're boosting almost every single department right now. So that is something that is doing really well. But obviously, if we were doing very well, then the market would be flying. It is not. And as a research analyst, my job is to look at both sides, good and bad. So let me tell you what is going on with respect to the key risk right now as well, or the problems in the market. Number one is global uncertainty. As you know, I don't have to go deep into it. There is massive uncertainty happening all across the world, not just with the tariff, but also with wars going around every single time, right? Next, we might have a lag in consumption. There is a problem here, which I believe that even though the GST rate cut has happened and the rate cycle has kicked in, the consumption might not, be as fast as possible. And that is because there is a lot of IT company layoffs happening right now. And if you know that the IT company employees are usually highly paid guys, and they are now without a job. And in fact, the higher end senior managers are also getting fired. So there might be a lag in consumption. That is a risk that I'm going to keep looking at. Number 3 is the earnings recovery delay. Now, as you know, this earning cycle might not be great because the GST cut just happened. So the next earning cycle might be good. And only thing is, I want it to be a sustained growth, not a one-off. So if the next earning cycle becomes good, then it becomes a one-off scenario and becomes a very lumpy thing to look at. And finally, supply chain disruption. This is mainly because of a lot of nonsense happening in the market with global trade getting halted, mainly because of wars. The sea routes are getting affected. The freight charges are going up. Trump tariffs are hitting. Literally, when Trump announced a massive tariff on China, most of the goods in the market got stuck in customs and 100 different places, right, which kept creating more and more problems. So that is a risk factor that we are looking at. After that, we also have to see the private consumption. We're looking at data, as I told you. So is the private consumption going up? And according to data, we are looking at it that the private consumption in a quarter to quarter basis has been doing quite well, right? So we have seen a growth in the third and fourth quarter, and the velocity of money, where we call it the GDP divided by money supply, that is also rising due to seasonal events right now. And a lot of people say ki paisa nahi hai, paisa nahi hai, paisa nahi hai. But I know for a fact that in the last 3 months or in the next 3 months, people are going to be spending a lot of money on weddings, on traveling, on Diwali. Wedding season is starting. Sab jo bola, I don't have money. All of that will be seen right now. Coming to GST cuts, is it helping the ecosystem? Is there a direct benefit to it? Yes, we are seeing this happening with the passenger vehicle space, both in the EV space or the ICE, which is electric vehicles, or the ICE space. So we are looking at companies like Maruti, Hyundai, and Tata. They have been selling a lot of cars, mainly because the GST and additional price cut per car has become very attractive for a lot of people. And this is actually helping some of them revive their gains, which they could not have done in the past. Not just that, I have to go deeper into data to understand more data. And we're also looking at airport traffic data, formal hiring data, personal loan data, mobile payments data. All of this shows me the consumption of the market, PV sales data, and two-wheeler sales data. And what we're looking at right now is that rural consumption is doing better than urban consumption. Urban consumption, people are losing jobs and problems are happening. But rural consumption, I am seeing insane amount of growth. As you see, just in August 2025, we saw a massive growth in tractor sales happening from the last 3 months. Tractor sale growth is happening. We are seeing growth in two-wheeler sales. So a lot of these things are coming up as well in the system. Cash circulation has obviously gone to an all-time low, but this is creating a massive advantage in our ecosystem right now. The only thing that I'm seeing grow very well was the air traffic data, which is now also slightly getting reduced at this point of time as well, right? So this is something that we need to look at. Now coming to the stock number one that we are very interested to look at from both from a fundamental and technical standpoint. So let us quickly look at it from that point. The first company is called Allied Blenders and Distillers. It is in the alcohol space, right? We are not going to put buy rating or target price and stop loss or whatever. I am looking at it more from a fundamental standpoint, and I believe these companies should do well over the period of 1 year. But you can take the timestamp as of today and you can figure out what you want to do, right? Number one, we are seeing a strong growth in earnings. This is the investment rationale that we have to do as a research analyst. They have basically grown their top line by 19 to 20% in the last 2 quarters, and the profit after tax has also grown up quite aggressively. And we believe that this would continue to go up for the next 3 to 4 quarters because they are doing something really well, and they're playing on the premiumization trend over here, right? Number two, which is a very good fundamental trigger, the PET bottle manufacturing plant is going to become operational very soon. Now, what do you mean by PET bottle manufacturing plant? So this basically helps them improve their margins because now they are going to have it in-house instead of outsourcing it to somebody else. So they have basically done a backward integration, and this is going to help them save a lot of cost. So 1 or 2 bips on the EBITDA might go up as well. They are also launching India's first malt distillery, which is operational in Q4 FY26. And this is again going to become very interesting because now they want to become premium, as I told you. So we will see a lot of new premium launches coming into this space as well, right? Apart from this, they were earlier only in the lower category. The alcohol price was in the lower category. Now they have expanded into super premium and luxury premium as well. So in the luxury and super premium space, they have launched a brandy called Golden Mist. They have Russian standard vodka, which ranges between 1700 to 5300 rupees. And realizations in this is also 3x to 5x higher than the mass premium range. Apart from that, another thing we're looking at is margin expansion. This is what I told you. They are doing backward integration. They have FTA benefits, which is free trade agreement benefits. They have growth and premiumization kicking in, and they have cost efficiency. So basically 4 interesting triggers are playing out in this company. And what they are saying is their margins, gross margins are going to go up by approximately 1.8%, and their EBITDA margins can go up to almost 5%. right? Even if I take a conservative number of not 5% and maybe 3%, that still adds a good amount to the bottom line, right? Now, if you look at the entire value chain of this company, where are they? How does it grow, etc., etc. So, if you look at it in the mass premium space, they have Officer's Choice whiskey, which is one of their most premium selling brands. Then, if you go to prestige and semi-premium, they have Sterling Reserve, they have Iconic White whiskey, they have Golden Mist brandy. Earlier, they were always doing whiskey. Now they're expanding into other things apart from whiskey. Now they've entered the super premium to luxury space, where they have Russian Standard Vodka, Zoya Gin. Recently, I tried this as well. They had Pumori Gin, Arthur's Blended Malt Whiskey, and then Russian Standard Vodka, which is the 5,300 rupees price point. But you see, they're there everywhere. And this is something that in India, people like upgrading themselves as and when their lifestyle upgrades. They like to upgrade their alcohol preference choice as well. And this is basically how it looks like that. So they have growth across the entire value chain over here, right? And antithesis, because it is very important to look at both good and bad. One is obviously this is a highly regulated space. So anything that goes wrong in this space will affect the company severely. And we saw that with multiple other companies where they had court cases going on, where Andhra Pradesh government changed some rules. So a lot of things keep happening like that. They increase the duty and all of that. So a lot of things change here. Now, second is equity dilution. Now, this is a problem because the promoter shareholding today is 80.91. So there is a point where they have to come below 75. So whether they sell 5% to a mutual fund or a foreign investor, or they raise money via a QIP and dilute 5%, only time will tell. But there is a 5% dilution coming sometime, right? Risk of competition is there because companies like United Spirits, Radico Khaitan, that's killing it in the market, Tilak Nagar Industries, which they had a problem with in the past, are already well-established players. So obviously there are players in the game. It's not some unique company, but the market is growing so well. So that is something that we're looking at. Again, execution risk on CapEx project because they're doing a massive 525 crore CapEx plan. And if something goes wrong, then the margins will start getting affected. The debt you still have to pay at this point because you have taken a loan. So a lot of things happen at that point, right? Awesome. Number two, we have a very interesting finance company, NBFC company called SBFC Finance. Now, SBFC Finance is a very, very, very interesting company. MSME space, does lending. Now, let me talk about some interesting factors here, right? From a macroeconomic standpoint, 4 positives that are potential enablers to this tailwind. Extremely good monsoon has happened. No income tax on income up to 12 lakhs. Reduction in borrowing rates, moderating inflation. All of this helps the lending upcycle to begin as well. Second, which everyone in the industry talks about this company, is the DNA of the management. The management has been doing this very well, Asim Dhruv, and he's always been very cautious and realistic. Okay, what do I mean by realistic? Even when the whole correction was happening before the down cycle of the MSME space or the NBFC space, this company basically came out well in advance and said, we are seeing something is not correct. We are seeing something is wrong. So we are putting provisions right away. And that is why you see in the last 2 years, they did not grow because they kept putting the provisions and said, we feel something's going to go wrong. And things did go wrong after that, right? And that is why now they already did everything in the past. So most other companies are suffering now, whereas this company has started going back into a good zone, right? Now, strong growth in earnings, even in this bad cycle of, rate cycle that they had till now, their AUM grew by 30% year on year, even in this bad cycle. The disbursement volume growth was 48%, PAT growth was at 28%, and they are looking to cross around 100 billion rupees AUM in FY26, and they're growing quite well, and they have a good name in the market. Now, ROE can reach approximately 15% by Q4, which is currently at 13.5, because OPEX is coming down by 50 bips a year, right? Again, in a down cycle, the company managed to have 2.78% GNPA and 1.57% NNPA. And another thing that they are also doing really well is they are expanding their branch network. So their branch, which is, going very aggressive right now, they're almost at 600. They will be expanding their branch network quite aggressively going forward. And their AUM per branch is what they're looking at increasing right now, which is the amount of money that they can generate from a particular branch. Now, where do they lend? This is important because in the lending space, there are 2 types of people who lend. One who lend aggressively without any logic, and one who can lend well. But please note, in a lending space, everyone can lend. Even I can lend if I want to, right? But if I can lend good is where the difference in good and bad companies come. So if you look at this company, they basically lend in a smaller ticket size. This is where they focus on. They have a CAGR of 24%, MSME, as I said, and they focus only on the MSME space. They also have a small portion of gold loan right now, but that is only 10% of their entire basket, right? As you see, they are expanding across the nation. Earlier, they were not that big. Now they're slowly expanding across the nation. And 85% of their AUM today is with customers who have a CIBIL score of 700 and above. So their lending style and mechanism is very good, and that is something we're looking at. Now, obviously, coming to the bad side of things, antithesis, what is going on? They are seeing a rising trend in early delinquencies. What is early delinquencies? Basically, I missed my payment, right? So we are seeing this go up. It went from 6.4 last year percent to 8.1%. Now, if they don't pay for a long time, that translates into GNPA and NNPA. So hopefully that should not be the case. But the management in the con calls have admitted stress in concentrated sub 10 lakh rupee borrowers, anyone borrowing less than 10 lakhs, where the industry NPAs itself rose by 0.7%, right? So this is something that we need to be very cautious of. The dependency on MSME lending, because 83% of the AUM today is in MSME space. Any rule, any problem with Trump tariff being such an annoying thing, MSME spaces are currently having some disruption, right? Gold loan growth capped despite profitability. So they are actually doing very well in the gold loan space, but they are not growing it at all. They're focusing still on the MSME space, and they've capped out their thing strategically internally to grow, right? But if they grow, that should be great, right? ROA compression is also there because they're building their leverage up right now so that they can start lending more. So that is something that we're looking at as well. Now, coming to company number 3, don't worry, this is the last company. I won't bore you too much. This company is called SJS. Now, what is the rationale behind this? In the last 5 years, they have grown their top line by 32%, EBITDA by 26%, and PAT by 26%. So fundamentally, it is a grower. They have recently started doing a lot of exports. They plan to increase their exports from 6.7% in Q1 to almost 15% by FY28, right? Very good management. New customer wins keep coming, like Whirlpool and Stellantis. And a lot of people thought that SGS was actually a two-wheeler and four-wheeler component provider, but now they have started expanding into the consumer space as well, and they're providing all of this chrome plating to the consumer space, right? Third thing we're looking at is new capacity for premium products. They have actually set up a new plant, the SJS Decoplast, and this is only going to be used for higher margin products, and this is coming in Q3 FY26. So again, a big thumbs up for this. Fourth, increase in kit value. The shift towards premium products is happening a lot, like illuminated logos, even smaller cars want those, logo lights that come when you open the door, like Mercedes-Benz. So that is something that they're doing. Touch screens are coming in. So they are now working in all of that. They're also looking at, adding more money into the vehicle space and adding more money into the appliance space. So both of this are happening as well. Now, they've also done 2 inorganic acquisitions, which have helped the company a lot. One acquisition was in July 2023 called WPI, and that grew by 1.5x. The revenue grew by 1.5x since the acquisition in 23 July. Next, SJS Decoplast, what they did, they saw a 3x revenue growth since FY22. That means it basically shows me that whenever they invest in these companies or acquire these companies, they do a good job in turning it around. That means the synergies are nice. Now, coming to the kit value, earlier a kit value used to cost only 1,200 to 1,500, but today that same kit value has gone up to around 3,500 to 5,000 because they have moved up the value chain and they are now providing premium services to people. Now, if you look at all the things that they provide, this is taken from their investor presentation, you will see that these are all the different things they provide, from decal to body graphics, 3D application and dials, 2D and dials, overlays, chrome plated parts. In a car, they provide so many things. And if you look at it on the left, you will see aluminum badges of Whirlpool and a few other consumer companies, Godrej. So this is basically what they're doing, and it's a very unique business because in India not many people are doing it from a professional standpoint. Now, coming to the risks or antithesis of this company, customer concentration is there because SGS today relies on few large customers like Tata Motors, Hero MotoCorp. Any loss in this major client would definitely disrupt their cash flows and the growth instantly. Right. Second, regulatory policy risks. We have been seeing a lot of things that can impact this. So anything that impacts the sales will become a bad thing. Right now, the sales are going well for all of these companies. So they are in a good zone. That is why we believe in the next 1 year, it should be okay. But if there is any new regulatory policy that stops the sale of these two-wheelers or four-wheelers, then they will have a problem. Third, they have a technology risk because SGS business model depends heavily on cutting edge technologies like IML and IME. So a failure to stay ahead with innovation would definitely create an issue. And there is also competition from large players because large global players like Minda and all of them, they are Lumax and Minda, they are now focusing on entering the decorative aesthetic space as well to compete with SGS, right? So guys, these were the top three companies that we think are going to do very well until the next Diwali 2026, right? And again, my name is Shashank Udupa and we're SEBI registered research analyst. And as you can see, we wanted to just do a pure fundamental analysis and give you three different outlooks of it. Pratham Gupta, who is also an NISM certified research analyst, has helped me in this entire presentation as well. But again, I hope you guys have enjoyed this and I hope you guys like this. And I again want to wish all of you guys a very happy Diwali. And if you have some time, just look at this small 1 minute clip of our office celebrating Diwali, because as you know, we are all one big family. Okay, I wish all of you and your family a very happy Diwali, but just watch this out.